Okay, and here we are with the summary of week 2. And what a week it has been. Should be very, very brought in a light into the tunnel, and a lot of things should have clicked already. Of course, I got with me our two bunnies, Sakbo and Cam. If you just want to say hi.
Hello.
So yeah, we give you a quick summary of what happened and what you should know at this point. And of course, a little questions going on. And yes, you have to put a lot of tasks in. So let's take a look first what we covered so far. So you already should understand, and of course, that's not only week 2, that's also the understanding of week 1 already. And just take a look at one speckle of a second. 900 slides, huh? What's going on there already? And that's like just week 2, I think. So I think we're over 1,000 slides, whatever, at this point, and we're in week 2. Crazy. So just realize of how much craziness and effort we're putting in for you guys, huh? How crazy is that? So anyways, what we covered so far and what you should understand already. So first things, you should understand like the basics of what's going on with this market in the real world, of how it's like controlled. Again, not conspiracy theories throwing around, but you should understand of how it's being controlled and delivered by Enigma, of how they're using money against you technically, of how they're in control of the money, of how they're using retail strategies to build up, again, this liquidity, and how they build up these strategies on purpose to keep the wheel spinning. Again, sometimes, of course, a triple top will lead to a good trade. Of course, so be a trend line, so be smart money concepts. Everything will lead to a good trade at some point, but not on the long run. Of course, they have to make these concepts work from time to time. Otherwise, no one would ever trade them. Right? So, of course, if you see a double top, it doesn't mean necessarily it will fail immediately. No, sometimes it can give you a reaction, has to. Otherwise, these concepts would not exist in the first place. And of course, they want to keep the wheel spinning. You should understand also the basics of the basic master map and how it will help us in the overall process. Not of how, again, we will trade these basics. No, of how we can use the understanding of these basics and then implement it in the bigger picture. Again, we digged a little bit, or like in week 2 now, we already showed you the build-up inducement mitigation cycle. So you should already understand what is an imbalance, what is a mitigation. We always dig into the build-up and inducement things as well. But you already can see slowly of how these basics can also help us if we use them in the right understanding and the right approach. Then obviously the power shows itself. Then you should understand the difference between minor, medium, and major inducements using the Asia range for your guide. Also understand if it's internal liquidity or external liquidity, of meaning a different day, like day to the left, or if it's a major inducement taking out a major structure point, and even like medium ones, if it's just a little pullback push to the left. Is it medium immediately? Of course not. You also should understand like what does medium inducement actually mean. Just because it's a little baby push to the left in the middle of a range doesn't make it medium immediately. Technically, yes, it induced something to the left on the previous day, but that doesn't necessarily mean it's immediately medium. So get your eyes and your brain schooled about it to understand when is it actually medium and understand the significance of the structure plays. Then we of course dig into Asia range and how to use it as an intraday guide. And at this point, never ever again, you should not use it in this scenario. Like you should have, let me say like this, you should use Asia range on a daily basis to start the day, and then should also for ending the day with London close and stuff like that. A little bit after that, of course, you can trade a little bit after that as well. But Asia range always sets a new day. That resets everything, and that's where your overall intraday analysis starts from 0. Okay, so get used to that concept of every day you can see in one picture on the M5 from start to end in one picture. And you also should understand of how we now utilize timings overall. Like week 1, we covered London Open and Frankfurt. And now we dig into a lot of more timings, right? So again, what have we covered in week 2? Cam, if you want to take over.
Of course. So obviously the first thing that we covered in week 2 is the LIT cycle, where we covered build-up, inducement, mitigation, and we also included the option of relevant market structure. And then we went on and we covered the difference between an SMT and an FFS. Obviously, your SMT will give a reaction and your FFS will not give you a reaction and will make you say FFS, hence the name. The transition to focusing on intraday trading. Also, we added new timings. So I believe we added the magic manipulation minutes timings, New York trap time, and London close. We showed you one of the daily cycles, which was the LIT starter kit. And then we also brought a bit of the simplicity approach. We brought you build up, inducement, break of structure, which is again optional, and mitigation. There's obviously a lot more to that, and we will be getting into that in the later weeks.
Yeah, so very important again. The key learnings, as Cam said, are definitely the daily cycle variation, or the first daily cycle variation, which is the starter kit, in combination with the understanding of how they're using timing and the advantage, and again, for most people's disadvantage, and how they're using also the session opening times with Frankfurt, London Open, where the liquidity enters the market, and then of how they're building up these traps above that. So that's our overall compass, the timings, and then we have the LIT cycles to give us even a clearer picture. And slowly but surely, as Cam said also, we started to combine everything with the simplicity approach. And as you also saw, it only was part 1 of it. So in week 3, of course, that's the true madness also begins and continues. And then, of course, we build upon that. So hope that is very clean of what we covered so far. If not, then just revise everything. You have the recordings. So for obvious reasons, so use advantage of that as well. Okay, let's test your knowledge. Queen Sakba, you have the pleasure.
Hello again. So our first question that you will need to answer is, what is the time frame you will focus on from now until eternity? So remember, it's of course one number. And I'll give you a few moments, of course, to answer it. And you, of course, must get it correct. Okay, 1, 2, 3. So, of course, the answer is the lovely M5 timeframe. Of course, this is essentially what you will be looking at regarding the daily price action, the overview, essentially. And then, of course, we will delve into the M1 timeframe when it comes to entries. However, the M5 timeframe, of course, is the key timeframe. So question number 2 is, what steps of the simplicity approach have we covered so far? A little hint is it's 4 steps, of course. So that means you need 4 separate answers in order, of course. And I will give you a few speckles to answer that one too. A 1, a 2. 3, 4, 5. Maybe it might give you a little bit more to think about. So now the answer is build up, inducement, break of structure. Of course, it's relevant break of structure, not random. And then, of course, your mitigation. So that's the key cycle essentially that you need when it comes to the LIT overall strategy, should I say. And then our next question is, what is the difference between smart money trap and FFS? Now, this one's a key one. So just remember what you've been taught and understanding the difference of each one, essentially. Again, I will give you a few moments to answer that. So the answer is a smart money trap provides a reaction. So essentially a mitigation zone where it provides the reaction, but of course it doesn't sustain, hence it's a smart money trap. Then we have the FFS, which is where it gets blown straight through. So it does not give you any sort of opportunity to enter off. And hence you say FFS. What is that, guys? You're meant to talk.
I just give the proper illustration of how it looks like. So
FFS.
So if it gives like the small money trap, you should expect a little pullback out of it, a reaction, right? And for fuck's sake, it's just blowing straight through it. And again, makes you say, for fuck's sake! And then obviously you shout at us because you feel like, oh, that doesn't work! But guess what? You should not trade small money traps anyways, and you should stay away from them. And you should know when they are happening. And of course, you have a lot of rules already to identify them also. It should become also very clearer in the ongoing curriculum. But next question.
Lovely jubbly. So our last remaining question is, what are the main time confluences we focus on UTC plus 2? So again, it's important to understand that you have the right time based on UTC plus 2 and convert it essentially if you're using your own UTC. And this, of course, I'll give you a little hint. It is
a lot of times.
Yeah.
So just use the chronological order of how the day actually proceeds and then walk it through your head of what's the first time window. Again, as a quick hint, Asia range is not a time confluence. It's just our intraday guide. So what's the first time window we would be interested to trade in? And then just go on your head. Okay, after this, what comes next? We actually have a bunch of time confluences. Okay. It's very, very important. Our compass.
So they need a few moments of no noise so they can think.
Or you can pause the video or both.
Yes, pause the video.
Right, so pause the video. You have to write everything down. That's important question. No. Immediately getting banned. Cheat. Okay, anyway, that should be enough time. If I'm assuming everyone paused it and wrote it down. So, Sakura, what's the answers?
So, the answers are, our first time in confluence is Frankfurt Open. So that is 8 a.m. UTC plus 2. The second confluence is 1 hour after, which is the London Open inducement, essentially at 9 a.m. Then we have the Magic Manipulation Minutes 1, which is at 10:30 a.m. MM2, which is, of course, 12:30, 2 hours after MM1. Then we have, of course, New York Open, which is our 2 p.m. window, UTC plus 2, of course. And then, of course, New York Trap Time, which is 3 p.m. Essentially, this is our timing window that we use as LIT traders. Of course, it's a 1 hour window. And then, of course, we have London Close, which is at 5 p.m. UTC plus 2. Now, it's important that the last timing window is usually where volatility runs dry. So entries may not be very nice, or should I say the movement, essentially. So yes, I hope you got them all correct.
No, and it's getting very important also that you get used of how to using these timing confluences, right, for your compass reason. Of course, every day will be different in terms of, okay, sometimes an inducement happens in Frankfurt, sometimes an inducement happens in London Open, sometimes in Magic Manipulation Minutes 1, sometimes it's a completely different cycle variation. But again, not every day can be one-to-one similar. That's why we have so many time windows we have to monitor, and then the cycle and the overall daily cycles, they confirm the rest, right? But so that's why it's the overall compass you have to get used to, and not every day can be the same, of course not, but again, give it a little bit of buffers and you will find the same exact day, which happened yesterday in terms of the cycle variation. It happened like 1 month ago as well, exactly the same. And we showed you multiple examples where it's like virtually identical and you cannot get more similar and closer to that. We will dig also into the cycle variations. Again, for now, you only know the starter kit of one cycle variation, where you have your Asia range, right? Then best scenario, like Frankfurt, it'll trap something in here, let's say equal lows in here, whatever. Frankfurt traps it, makes an inducement high. That's in your London open window. Magic Manipulation Minutes 1 gives you an entry. 2 in here. Whatever messes around, builds a double bottom. Then New York Open traps the move high. New York traps take it out. And then whatever, you continue like this. And then London close. And you get something in here. And then it ends the day off like this. That's the basic cycle kit. Self-explanatory that this happens not every single day. It can't, obviously. If it would, then it would not work anymore. So that's why they have to switch it up with multiple cycle variations. And also sometimes, again, the high inducement is maybe London Open. Sometimes it's magic manipulation means one, sometimes in between, whatever. You're smarter than a clock and smarter than a box, also with age range and stuff like that, right? So we give you a few buffer boxes. You will also get the indicators or the templates technically to show these time windows for you. Okay, you will get the tasks you have to do on the next slide. And before you can do the tasks, you have to write us in Discord. We have like a little channel in there as well. And it should say week 2 usernames or something like that. You have to write us your trading view username. Just write that in, just send it in, nothing else. We will give you access to the template. We will also make a video where you can find that after this video. But for now, you will get some tasks. And again, the next video then explains of what you should do to get access to the template, where all the fancy timings will show to you. You don't need to draw Asia boxes again. You don't need to worry about match manipulation minutes. We show you exactly how to use it, how to get access to it. So that will be in the next video. For now, write down these tasks. The tasks will also be attached in the next channel and the week 2 channel and Discord. You will also see them here again. So, but for now, just get used to the tasks. So Cam, what tasks do we have?
So the first task is to mark up 10 charts with relevant retail liquidity. Try not to go too crazy with it. Try to, do the sensible ones, what you think makes sense. You don't want to have a very messy chart when you're trading. The next one is obviously the timing-based inducement. So that's Frankfurt Open, London Open, MM1, MM2, New York Open, New York Trap, and London Close. You can use the indicator that we'll give you, so you don't have to go and draw up the lines for when they are and all of that sort of stuff. Next up, obviously this one's going to take a little bit longer, so you don't have to do as many, but we'd like you to do at least 5 examples of the simplicity approach up to mitigation. Obviously you haven't learned the other steps yet, so you can only do it up to mitigation. That's 5 full days. And then we want you to do some examples of SMTs and FFSs. That one should not take you too long. And then this last one is going to be quite a big time sink, and that's going to be 5 fully detailed days, starting with Asia session, with the simplicity approach in combination with both Asia range, our guide for the day, and the timing confluences. So that's going to be Frankfurt Open, London Open, MM1, MM2, New York Open, New York Trap, and London Close. So you can see why that's going to take a while. Obviously, these are just the tasks that you have to do as a minimum. This doesn't mean that, I've done 12 markups of charts with relevant retail liquidity. Is this fine? Absolutely. You need to continue to do more and more. So maybe let's give some examples of these tasks. Perfect. So as you can see, this is just a fairly basic one, just showing us the timing inducements. So you see we have an inducement at MM1, inducement at MM2, New York Trap time, London Open inducement, MM1 builds equal highs with something on the left. New York Trap, we can see, lovely inducement, and then we also have our London Open, London Close mitigation.
Yeah, and then of course get used to it already, make it a little bit more detailed also, just show us what you know, the build up, awesome, breakout traders entering here, of course, inducing Asia high, timing, match manipulations 1, London Open stays inside. Just make it detailed for us so we can really see what you see, and so we can correct you, because if you don't make it very detailed, again, as Cam said, don't make it too detailed. Don't like that's equal lows, 2 wicks. Oh no, that's too detailed. Again, focus on the bigger picture. And again, that's something like build up. Okay, that's okay. That's an inducement high to go lower into mitigation. Perfect. That's a new build up. Getting induced low a little bit to go further, breaking the structure, inducing people the wrong way direction. Does what? Mitigates in the order flow. Never took out Asia low. Perfect. Goes back, builds the equal lows in here. Again, channel being built up in here. Perfect. The day is over. We're not that much interested anymore, but they can make something like this also. Again, but the next day is more important. Build-ups, vector candles, again, whatever, giving like this fakeness in here, a little build-up in here as well. Again, there's your break of structure after. Again, Asia in this scenario induced all this liquidity already. Again, then showing, again, build-up, induced. Same thing literally as it happened here. Happening here also into the mitigation, order flow, perfect. London open inducement, of course, inducing this triple bottom and Asia low of next day, medium inducement, boom, trading away. When does it happen? To the absolute minute. What a surprise. Then if you have trading view open, of course, you have to look to your left also what's going on there and stuff like that. And show us the New York trap reversal with timing, with the equal highs or whatever, this build up in here. Perfect, getting induced, boom, 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 London close, mitigates, rule set, perfectly aligned. You see, you can make it more detailed, you have to go too crazy with it, but something like this for the 5 detailed ones, right? Such as maybe a little bit lighter one. Sokpo, if you want to go with that one.
Okay, so in this example, we have the example, of course, being the London close inducement. So if we go in the beginning of the day, the generic understanding is your build-up, again, in the form of a channel in this scenario. Again, I'm briefly drawing it. And what we have, of course, is London open inducement of Asia high being here. Then what we have, of course, is price then, of course, has its reaction. It starts inducing these greater levels of liquidity lower right there. What we have, again, perfectly is these equal lows. You can see it's tapped quite a few times over here. Price reacts again, this becoming our build-up, essentially. And then what happens? New York trap, perfect inducement low of Asia, as well as it being equal lows. What happens next? We get these mitigation areas in here, as well as equal highs over here. Price induces with these nice vector candles. And then towards the end of the day, again, 5 p.m. UTC +2 being London close, we of course get the inducement high, taking out everything to the left. And then, of course, the reaction bearish, with a mitigation zone, of course, to enter off. Again, it's important to be conservative of your TP, as it's the end of the day. Of course, volatility runs low at that point. So essentially at these mitigation zones like such, you can, of course, close your trade.
And then to show you an example of the simplicity approach markup, Cam, if you want to do that, Sokpo, if you want to remove, or let me remove it for you. Okay. So, and as you see already here, it doesn't need to be too crazy. As you can see, that shows everything we need to see in order for you, first of all, that you understand what's going on. You don't make it too crowded. But Cam, if you want to cover that.
Of course, let's go into it. So obviously we're showing you it at step 4. We're not going to go step by step, but let's just go through it a little bit. So in Asia, we build up our long trend, build up also these equal lows, channeling, and then coming into London Open, what do we have? We have our inducement. Okay, then we can look to choose possible mitigation areas. This one would obviously be without your break of structure, but your break of structure would be down here. And then you get another potential mitigation right here. So we're trading away. Then we identify again. What do we go into? Another build-up stage. We induce the build-up to the downside, and then we induce the build-up to the high side. We come down, we build equal lows. So an entry like this would have been very nice, but as you can see, just missed, happens, but that's fine. We get another inducement to the downside, building equal lows. We've also got Asia low on the left, so we can be quite confident that this is going to be a false reaction from this. Then we have this mitigation zone, lots of imbalance, price comes back in, taps the mitigation zone, and then break of structure again to the downside after our mitigation. And then we can begin to play order flow until at least here, maybe, oh, sorry, I see the wick, at least here. Maybe we even have targets lower, and then again, one final build up before we induce low again.
Exactly, and that's all you technically need to show us. And you see, everything is in there. Again, maybe just also This baby wick in here, Cam probably didn't see, also led to the break of structure that what makes this zone valid for now, right? But just show us the stuff so we can see, you understand what's going on, and don't make shit up. Again, like, don't go too crazy with it. Just show literally what is there and don't go too crazy. Again, that's the key, to keep it simple. That's why it's called the simplicity approach and not the too crowded, going insane approach, right? So then maybe one last example, and then I think everything should be clean, right? So for, again, that's already a little bit too much, right? In terms of this, we just want to show that's a little bit too much, but you can see still what's going on. Then keep it simple on the day of the Asia range, right? Just one channel, perfect, getting induced to the high side to go what? Breaking the focus structure, induce people long. To do what? Induce with vector candle. So you go here, make an arrow and say vector candle, right? Perfect. Timing. Oh, what a surprise. Next channel, getting induced low. To do what? Vector higher. Perfect. Didn't take out Asia high. So we know, okay, it should still go higher, but at least it's good for a pullback. The pullback has what in it? Equal lows. What a surprise. That's your build-up. That's your inducement low. That's, again, your internal build-ups, baby build-ups, into inducement, into mitigation. Perfect. Another channel, vector candle. In this case, we had two. Happens also, rarely, but sometimes it happens, especially if you look to your left and there's not a clean target you can take out, right? So sometimes they give this fake, whatever, technically not fake, but very nice vector candle. But again, that's how you have the break of structures in place also, and then leads to a new high, and this becomes 100% your smart money trap. Then this is your potential area you would be interested in, and then the cycle is completed in here. But you see, simplicity, that comes to power. The power literally comes out of simple stuff. Same thing with the smart money traps and the for fuck's sakes. Just show us that you understand it. Again, if you have this imbalance zone in here, smokes right through it, for fuck's sake, perfect. What is this though? Asia low, right? Again, double bottom in here, or even triple bottom, or even quadruple bottom if you see it like this, right? So guess what? Getting tapped after an inducement smoked the for fuck's sake into timing aspects, right? Looks more like a Frankfurt in here, but we have like the quadruple bottom on the bottom. So of course this will not gonna hold. It will give a reaction though, induces the areas, induces high to do what? Go lower, right? Show us that stuff that you understand it. So the same thing as this one. Smart money trap, because it gives a reaction. The whole thing gives a reaction. So smart money trap. But guess what? The next imbalance area gets completely smoked, becomes a for fuck's sake. So just show us that you understand these differences. Look again through the task. They should be in the description. And you also should have by now then the template for it, right? So look first, before you do the task, go to the next video. It should show you how to put in the name in Discord, how to use the template, and then the charts will look exactly beautiful as ours with these beautiful colors, beautiful boxes. Everything is automated. You just have to put your time to UTC +2 as well. But of course, we show you everything in the video. So enjoy the tasks, put them in properly, and enjoy. Suck Bokam.
Yeah,
Lovely jubbly.
Enjoy.
There you go. Enjoy the hustle, and we catch up very soon. Have a good one.